Good afternoon and welcome to our today's session. We are doing mergers and acquisition. It is the second topic of the second topic we are covering this semester for advanced financial management. We have already covered the portfolio theory and analysis. I hope now we are conversant with the questions that we have already done, and also you can just be able to conduct the questions tested on the under the same topic that we have already covered. But today now I want us to focus on the mergers and acquisition, and I want you to understand that this aspect of the mergers and acquisition, it is so much of practical. These are the things that have been happening. Know very well that these are not the new terms to us. We are aware that the mergers have been taking place together the aspects of the acquisition. So allow me to go straight to the analysis, and we will start by looking at what is an acquisition. And an acquisition represents the absorption of one company by another. A company that is known as a predator is basically able to absorb another company, which is basically known as target. And remember now there is a purchaser. There is a guy who is going to be buying another company. That is why we are saying that the person who is going to be buying another company is normally called the predator, whereas the company that is going to be acquitted, or the company that is going to be bought, it is normally called the target. Now, the margin acquisition may seem the same thing, but when you look at it, you'll be able to find that the merger, the merger is where two or more companies come together to form a stronger company. Both companies terminate their previous legal existence and become part of a newly formed company. Now, consolidation is common in mergers where both companies are approximately the same size. Now, the examiner might be asking you, yes, the examiner might be asking you, what is a merger and what is an acquisition? And in that case, you'll be able to realize that a merger is whereby we are working to dominate a specific market, or we are bringing two companies who are having the same objective to work together and achieve a given aim. Or we are going to now to be acquiring another company because we are the most monopoly company there in a given space of a given space, and therefore we may not need another company to come in to bring new ideas. And I will be able to give an example here. When you look on since COVID 2020, you'll be able to realize that there are some of the acquisitions and mergers which have taken through. For example, the companies have just rebranded in the last 1 year or so. Those are specific around, let me talk about 4 years now. To boost business and invigorate presence and an economic impact, basically, which were caused by the COVID-19 pandemic. You know what happened, because majority of us, we are still under the employment aspect. Now, in that case, it is usual for companies to develop, they are going to be developing new logos. We are going to be marketing materials as well as names, so that we can be able to rejuvenate interest from consumers, employees, and investors, as well as stay ahead of the competitors. So when you look on the recent rebrands in Kenya that have followed mergers and acquisition, we are going to be talking about the Barclays Kenya, which is basically today called Absa Kenya. We used to have Kenol Kobil there before, it is normally, it used to be called Gulf Energy, which now came to Rubis, which is dominating the market. I remember we used to have Jamii Bora to Kingdom Bank. We used to have Transnational to Access Bank Kenya. I remember there was an NIC and CBA to National Bank of Kenya, not the national, but NCBA. Now, we remember in January 2021, there is an history regarding to the Rubis Energy Kenya managing director who was able to say that their rebrand was informed by a study that was able to show that their consumer preferred their company shift to Rubis as it had the international appeal. That is the reason as to why you find such cases might be coming in. So that is one. You remember initially that the farm said indicated that it was the farm was indicating that it was willing to retain the Colonel Kobil brand name in the Kenyan market, but that did not work. Now, when you look on in September, for example, in 2020, the Jubilee Holdings sold a stake in its regional general insurance subsidiaries, and they were able to sell it to Germany conglomerates, Allianz SE, and you can be able to see all that rebrands have been happening to the Jubilee Insurance. So the deal was able to show that the new unit in which the Allianz was able to purchase a certain stake in it. People are coming in. Welcome all. I remember there was certain cases. I remember now for example, refocuses of ABSA in 2020 February, whereby the Barclays Kenya rebranded to ABSA to focus on their African financial markets. So this after the British bank Barclays sold most of its controlling stake in the ABSA, and you remember it was one of the South Africa third largest lender. Now, we also remember that the competition became more stiff in 2019, and the Competition Authority of Kenya approved a merger between the Commercial Bank of Kenya and the NIC Group Public Limited Company, resulting in the two banks rebranding to NCBA, which started trading as a single brand. So those are things that you need to understand. I remember now we had certain clauses for Kingdom Bank on SMEs. For example, after the 2 months of rebranding of Jamii Bora, the Nigerian Land Access Bank followed suit with its own rebrand of Transnational Bank, in which it was able to acquire the majority of its shareholders or the majority stake in the same year in July, that period, whereby it was able to acquire it for around 1.58 billion Kenya shillings from the companies which was owned by close associates of our late president, Daniel Arap Moi. I'm just giving you an overview of the things that have already been happening in our country. So those are some of the rebrands that we have been experiencing over the years. And we remember very well that those rebrands, and I was able to forget another one. Let me bring this into consideration. I remember there was a merger. Is it a merger? It was an acquisition, this one. There was an acquisition which took place between the KCB Bank, and the KCB Bank, which was able to acquire the National Bank of Kenya some time back. And we remember that the Central Bank of Kenya was able to approve the acquisition of the National Bank of Kenya. So the acquisition was expected to strengthen both institutions, which was able to leverage their respective well-established domestic regional corporate public sector and retail franchises. Those are the examples. I just wanted to give you some of the examples of the acquisition. That is one under the banking sector. When you look on there was a merger. That one I was able to explain some time back. But under the petroleum sector, I was able to give you the acquisition of such companies. I remember there was a time here. Let me just give us something that is not well known by majority of Kenyans. There was a renewable energy sector whereby a Japanese firm, which was called Sumitomo Corp, invested in M Copper, right? Holding Limited. The M Copper is the one which normally empowers homes and small business through an advanced pay-as-you-go platform. which basically unlocks the solar information technology, finance, and opportunity for millions of the people. So through this investment, Sumitomo was looking to help launch a new business related to distribution of power sources and be able to contribute to improving the living standards of people inhabiting non-electrified areas. And I know very well that the M-Copper is becoming one of the biggest financial contributor, the biggest employer in the country, and it is able to provide majority of Kenyans with the gadgets. For example, you could see what is happening with the motorbikes and solars and phones and so on. And if you can be able to relate regarding to the technology, there is a time where we find that a Japanese company, which was called, it was called Kepo Africa Ventures, which had invested more than 50 Africa, which was able to invest part of its resources to more than 50 African technology startups. So the company has so far invested in the countries like Kenya, Nigeria, Ghana, and also Cameroon. Now, we are saying that the CAPO it normally helps to link the African Japanese startups ecosystems. And it normally helps these portfolio companies access follow-on funding. So in Kenya, you normally find that the CAPOL has funded companies involved in logistics, vehicle manufacturing. We normally look at the health platforms, e-commerce platform, music platform, and payments platform. Those are the things that you can be able, and a lot of the mergers and acquisition is one of the most interesting part because it is so real. Mergers and acquisition is so real. Now, as you could be able to hear, because I was able to look at the grouping of the acquisitions and mergers which have taken place, let us look at why do these mergers take place and what are some of these criteria can the merger and acquisition take. For example, when you look on the horizontal merger, we are saying the merging companies are in the same kind of business. Like when I was talking about the NIC and CBA, usually as competitors. And in this case, we normally find two competing banks combining into one. That one I was able to explain. And also I was able to explain the issue of the acquisition of the KCB and so on. The vertical merger, you normally find that the acquirer buys another company in the same production chain. For example, you normally find a supplier or distributor of the raw materials merging with a manufacturing firm. That is very critical. You need to understand the concept. And we're saying where an acquirer purchases another company that is unrelated to its core business, it may be called a conglomerate merger, right? When you find that General Electric is an example of conglomerates, having purchased companies in a wide range of industries, including media, finance, home appliances, aircraft parts, and medical equipment. One of the examples of conglomerates, I will be able to send you to Chandaria. You normally find that the Chandaria companies, group of companies, it is involving different dynamics of business. We have also a common one, Samia group of companies. Therefore, bringing a good understanding of what is a conglomerate merger. For generic merger, we are saying is a type of merger where the companies are in the same industries or market, but do not offer the same products. In a cogeneric merger, the companies may have similar distribution channels, providing synergies for the merger. So the acquiring company and the target company may have overlapping technology or production systems, making for easy integration of the two entities. Um, uh, when I read about cogeneric merger, there is something that normally comes close regarding to cogeneric. When there is a time when you used to go and purchase toothpaste and toothbrushes being packed together, but you may find these companies basically packed their products together to dominate the market and be able to counter or supply the products in the same chain because one relate with the other. And in that case, you may be able to find that the basic of it is to reduce the distribution cost among other reasons in which they might be put in place. let us look at what are some of the motive for merger. And you normally find one of the key motive of the merger, we are saying, let us look at the synergy, right? Amongst the most common motivation for merger is the creation of synergy, and which the whole of the combined company will be worth more than the sum of its parts. Generally speaking, synergies created through a merger will either reduce cost or enhance revenues. And before we continue, I remember now there is a discussion regarding to the Finance Bill 2024. It is very crucial for every finance person to be able to update yourself about the key changes which might be affecting our country in the next few months, because I think in the next few weeks this will be the talk in town, and the majority of us will be having different dynamics or the different interpretations, and we need as an accountant to advise the organization of the key aspects of the tax avoidance, which we think it is not a concept which is illegal, and therefore, it is very crucial now for accountants moving forward to look at how can you be able to safeguard the interest of the employees, because even if today you are going to be negotiating for the salaries increment for your employees, remember that the life will still remain the same as the current salary which you are earning. Reason being, the rate of taxes will increase, right? And therefore the rate of inflation will go high. And I have seen, for example, in the same concepts, I just wanted for you to open up your mind during the time when you are reading, to be conversant with the what are the key aspects or what are the key changes and what will be affecting the normal consumers in the industry. I've seen before I joined here that the most of the goods which are moving within the East African countries might not be having more of the taxes and among other cases. And I have really realized that as we continue, the normal Kenyan is the one is going to be suffering, not the Raila Odinga or the William Rutos. So it's upon now in the next few years to be thinking of, if you want to vote Celestine, you have to be thinking about what is the well-being of my children, what is the dynamics, and what is it going to be affecting my country? What is also not really about also yourself, because you are still living here. So what is the effects of the staying in a certain jurisdiction? And therefore, I think we need to bring a lot of awareness to the people who they don't understand the well-being of the decisions and policies which are made by our politicians. Let us get back to the motives for merger. We shall discuss about the issues of the taxation, because I will just be able to analyze and look at the specific changes which might be coming in. And we are going to be analyzing all of these concepts on Friday by looking at what would be the differences arising from the current Finance Act 23, and what will be our standards of living. So when you look on the aspect of the synergies, we have seen that the synergies created through a merger will either reduce the cost or enhance revenues. So the synergy is not always achieved in practice due to the following reason. Number one, lack of complete and accruable information before the merger. We are also saying the inability to accurately value and measure synergy. The integration problems that after the merger due to the difference in the organizational culture and management styles. Then number four, we are saying because of lack of motivation of the part of the managers to achieve maximum synergy. Then number five, we are saying payment of high premiums on the acquisition of the target. The price paid to acquire the target may be above the market value of the target, which will outweigh the expected synergy. 1 minute, please. 1 minute. Don't go away. Stay with me here. Thank you so much. Let us get back to the mergers and acquisitions and the reason as to why these mergers normally takes place. Number two, we talk about the growth. And under the growth, we are saying corporate mergers are under constant pressure to grow their company's revenues. and they often turn to mergers and acquisition activity to achieve that growth. So the companies can grow either by making investments internally, that is what we normally talk about, the organic growth, or by buying the necessary resources externally. Those are external growth. It is typically faster for companies to grow externally. Growth through mergers and acquisition activity is commonly when a company is a mature industry. And we are saying here, external growth can also mitigate risk. It is considered less risky to merge with an existing company than to enter an unfamiliar market and establish the resources internally. The past several years of the fifth merger wave in the 1990s were categorized by a surge in cross-border. The number three is why the merger and acquisition may be taking place in industries where there are a few competitors or where the market shares is sufficiently concentrated, or the horizontal integration may be a means by which to increase market power. So when a company increases market power through horizontal mergers, it may have a greater ability to influence market prices. Take an extreme horizontal integration results in a monopoly. I think that one we could be able to see with the linked companies to the Kenyatta family. You can be able to know which company am I talking about. Number four, acquiring unique capabilities and resources. And we are saying many companies undertake a merger acquisition either to pursue a competitive advantage or to show up lacking resources. When a company cannot cost effectively create internally the capabilities needed to sustain its future success, it may seek to acquire them elsewhere. For example, a company may engage in merger and acquisition activity in order to acquire specific competencies or resources it lacks, such as a strong research dependence, among other aspects. Now, diversification. Unajua mimi, when I'm analyzing the merger and acquisition, the points are so many. The document, you still have it. But now, we can be able now, you can allow me to only analyze five areas of consideration. When you look on the diversification, companies sometimes cite diversification as one of the motive behind merger. Indeed, this was specifically mostly common popular motive for conglomerate mergers during the third merger wave. So the idea behind the company level diversification is that the company can be treated as a portfolio of investments in other companies. If a conglomerate invests in companies from a variety of industries, then the variability of the conglomerate total cash flow should be reduced, at least to the extent that the industries are uncorrelated. Additionally, the desire to diversify has led some companies to lose sight of their major competitive strengths and to expand into business where they lack competitive advantages. I have given you more points here, and you can be able to check on them around 13. Now, the method of considerations for payment, I will be able to come back there. I will be carrying out a very good analysis, but I can pass through them because they are well elaborated again. There is no need of coming back later here. So under the most of the common things in which you have to be the considerations are the methods which you can be able to acquire. One, you can pay by cash, and this is where the predator pays cash to acquire the shares of the target. And these are the following implications of both the target and the predator. Number one, the predator has to consider its liquidity position. Two, there is no dilution of ownership in the control for the predator company. The shareholders of the target firm will realize a certain value of their shares and lose ownership in the predator company. Number four, we are saying the shareholders of the target firm will realize capital gains, which may be taxable. The shareholders of the target firm are able to dispose of their shares without incurring a transaction cost. You know that we are discussing about the flotation cost among other costs. The shareholders of the target firm will receive a certain value for their shares in form of cash. We normally have companies who are doing this merger and acquisition through the share for share exchange. And we are saying in this case, there is no actual cash flow, but the shareholders of the target surrender a given number. And this is what, by the way, you are going to be getting in the questions of mergers and acquisition. We are going now to be looking at
certain proposals which are given out that we are going to be giving, for example, 1 shillings for equivalent 500 units of debentures of a certain company, among other criteria of the questions on how they have been brought by the examiner. So we are saying that this is known as exchange ratio, right? Now we need to be knowing what is the maximum exchange ratio. How much, how is the maximum amount do our company is willing to pay? That is the maximum exchange ratio. That is what we are going to be discussing later tomorrow. So now we are saying these are the following implications. Number one, it conserves the cash for the predator. Two, there will be increase in equity capital for the predator after the issue of the new shares resulted to decrease in the gearing level. These are the decrease in the financial rates. Number three, there will be dilution in ownership and control of the predator farm, including the possibility of dilution of the future earning per share. Hii nataka kuambia vizuri we want to pass. And I remember when I was doing advanced financial management, it's not that we used to have not the pure, but walimu they understand the concepts in terms of the materials and so on, and also the following up of the syllabus. It is very crucial for you to understand very well. If you want to pass advanced financial management, you cannot target the whole of it. I remember during my time, I looked on the areas which the question might be coming. I only targeted two areas. I targeted the portfolio theory and the international financial derivatives. I'm not saying that nowadays mukona materials. I can provide you with notes. I can be able to record my videos. And how did I be able to achieve this? I achieved the pass because I made sure that I understand even the twist in which they can be able to make in mergers and acquisition. Not the mergers, but international financial derivatives. It is a question which you are seeing in every past paper, by the way. Hakuna karatasi hapa ya AFM. Nashanganga wanafunzi wakisema, mwalimu tusaidie na prediction. Hakuna swali, hakuna past paper haina swali ya international financial derivatives. Right? Enda kwa hizo paper, uangalie how rare the portfolio theory and analysis, right? How rare the portfolio theory and analysis imemiss in an exam. Enda kwa hizo past paper, and it is a very good analysis you can be able to do. Enda kwa hizo past paper uangalie that whether you are not seeing the mergers and acquisition each and every time. That is the food for the of thought for another period. Let us look on the reasons. Any other way we can be able to acquire the target, and we are saying the use of the convertible security in terms of the debentures and preference shares. This is where the predator will issue convertible securities to the shareholders of the target. Nakumbuka hii example nilipeana some time back there. To surrender their shares so as to become debenture holders. These are the loan stockholders or preference shareholders in the predator company after the acquisition. And these are the following implications. It conserves cash for the predator. There is no dilution in ownership, and controls the shareholders of the target do not become the shareholders of the predator. It increases the gearing level of the predator, resulting to an increase in the financial risks. And we are saying in case of the predator issue debentures, it will enjoy the interest tax shield benefits. Those are the things that I will be able to analyze. It's not important for you to understand what about the issues of the interest tax shield here. When you are doing the advanced taxation, I like this. We will be able to analyze that. Now, remember, even when you love something, let me talk about you love someone. There is a way you can be able to prevent that person, right? From the aspects of attack. Let me use that. We normally say there is an evil. Nasikia mtu anakuambia nilishikwa na shetani, right? Now, what are some of the defensive tactics? How can you be able to defend your partner there? So in this case, when you look on the defensive mechanism in mergers and acquisitions, there are those companies which are promising. There is a story which ilikuwa developed some time back there regarding to the guys who came up with M-Pesa, and also the guys who are bringing up a lot of knowledge in regards to the implementation of the policies by the Airtel and so on and so forth, with the telecom and so on. Remember, these companies, when they see there is a potential company, nakumbuka telecom was doing well, more than even Airtel. I don't know what happened. They decided to merge and all that. And I don't know today who is dominating who. There was that theory or story regarding to that period. Now, I did not follow it so much, so you can be able to go through it. Now, in this case, because I'm talking about the defensive, there is a company. Let me talk about a banking sector. The banking sector may be seeing an insurance company which is coming so well, having good policies. It has good incentives to the shareholders, among other aspects. Then decides to pour the money to the founders so that they can be able to sell part of the stake, part of the stake. Now, there is a concept in which you're going to be finding that the small companies which they saw a gap exist in the market and they don't want it to be to bridge it. They don't want they are trying to bridge it because in every aspect, and if you want to be conversant in industry, whether in an account, I normally saw majority of you are saying I can be able to do everything and so on. If you cannot solve a problem in these markets, right? If you cannot solve part of the problem, if you cannot solve part of the problem, then you are not helping yourself. You cannot be able to help yourself. That is very crucial in terms of how you need to operate. You need to look at the problem existing in the market, then try to bring a solution in it, right? That is the food for thought. Now, when you look at the defensive tactics, as much as the mergers and acquisition are a good way of restructuring corporate entities, sometimes entities adopt hostile takeover. Sindio? Kuna kampuni, for example, like inataka kubaiwa na KCC, right? There is another company yenye inataka kubaiwa na Brookside. Sindio kweli? Now, these companies may decide to do the defensive tactics. So the target company may undertake a number of tactics to defend itself from a hostile takeover. Now, you just be able to pass through some. So when you look at number one here, I'm saying that there is a crown jewel. And we are saying this is where the target sets off the most attractive part of this business that the predator is interested in or highly valued assets, which in turn makes the company unattractive. Number two, we talk about the poison pill. And this is where the target undertakes an act that will make it less attractive and that can interfere with its going concern, e.g., borrowing heavily or declaring very high dividends, right? For example, now, there are I'm not advertising anyone, but there is this money market fund which is attracting a lot of attention from the public. It is normally called Zimele. We have Zimele, we have Ethica, we have some few companies which are coming in and they are bringing a lot of challenge in the industry. And the rates in which they are giving you, in real sense, majority of the investors may look at it in long term in terms of how safe is my money? And that brings the concept of the risk. How safe is this money which I have invested with X companies, right? That is very crucial and you need to look at it. So sometimes these companies are making a lot of they are giving out a high interest so that the investors may see them as the best in the industry, right? You need to be very, very careful. Don't lose your money after you have invested and you can see how the economy is. So the most important aspect when you're having a company, you have a very promising company in the industry, right? For example, to the IT, to the accounting industry, whether television, the media, and so on. You need to be very brave because in every day, every person wants to dominate the market, and therefore they need you to fail. By the way, when even you are going to work, you may see there is an account payable there, there is account receivable, there is credit controller, there is FC, right? There is FA, all right, and among other titles in the accounting. The people who are within your career, they want you to fail so that they can take your positions. That is why we like to do continuous development, right? Knowing what is happening in the market every day. What are some of the effects when the effect of the shift is going to be taking place. Now, there are those employers who will wait for you to make at least one mistake, so that because they know you have the minimum chances of making an error. So remember that there is no any friend at work. There is no any friend at work, by the way. That huyo jamaa unasemanga eti you are my no friend at work. Everyone is willing you to fail so that they can take your position. So that is something else. Number two, we talk about the poison pill. And this is where the target undertakes an act that will make it less attractive. And that can interfere with this going concern, e.g., borrowing heavily or declaring very high dividends. Right? That I remember I was able to get through it. Number three, we are talking about the white knights and the white square. And we are saying the target gets a familiar predator to acquire it instead. The strategy they should however be used as a last resort since it results in loss of independence, and again, a white knight may not be as elegant and is initially thought. Usually, the target company will enlist the services of the investment banker to allocate a white knight. So a white knight company comes in and rescues the target company from the hostile takeover attempt. In order to stop the hostile merger, the white knight will pay a price more favorable than the price offered by the hostile bidder. Number four, we might be talking about another defense tactic called litigation. And one of the most common approaches to stopping a merger is to legally challenge the merger. So the target company will seek an injunction to stop the takeover from proceeding. This gives the target company time to mold a defense. For example, the target company will routinely challenge the acquiring company as failing to give proper notice of the merger and failing to disclose all relevant information to the shareholders. Then number five, we are saying Pacman's defense. As a last result, the target company can make a tender offer to acquire the stock of the hostile bidder. This is a very extreme type of anti-takeover defense and usually signals the desperation. It is based on the rationale that the best defensive strategy is to attack. There are more of the defensive tactics which I've already put down there. What are some of the reasons behind failed mergers? And one of the key things, it doesn't mean that because you took a risk and you say, yes, I do, right? It means that it will work. It might not. So when you look on the aspects of trying to look at the aspects of the mergers and acquisition, it doesn't mean because we are merging, we are going to be succeeding. No, it means if, for example, you are dealing with the product life cycle, like what now we are going to be doing under the management accounting, for example, you have to be looking on the research and development. You need to look on the product development, the decline stages, among other aspects of the product development. Like the product life cycle, basically, that is the common thing that I'm supposed to be putting in. It is very crucial to understand that, regardless of the coming together to do business, this thing may fail. There must be a risk involved in it. And what are some of the the reasons behind the failed mergers? We are saying poor strategic fits. And we are saying the two companies have strategies and objectives that are too different and they conflict with one another. We have cultural and social differences. It has been said that most problems can be traced to people's problems. If the two companies have wide differences in culture, then synergy values can be very elusive. Number three, we are talking about incomplete and inadequate due diligence. And we are saying due diligence is the watchdog within the merger and acquisition process. If you fail to let the watchdog do its job, you are in for some serious problems within the merger and acquisition process. What are the watchdogs? I know today the watchdogs are different. They are the watchdogs which are the internal auditors within the organization. Let us not basically discuss about the external auditors. But now we are looking on the internally. The watchdogs are the internal auditors who are within the organization to look on the controls, right? To look on whether everything within the organization reads true and fair view. There are those students who told me, Mwalimu, I like to do audit. I was so good in it. But what you need to understand about the audit at the advanced level, it is so detailed. It is so detailed. So detailed. There is no any question which is direct, and therefore there is a route for you to succeed. There is a route for you to succeed. But always when you're explaining the points, I remember my mwalimu used to tell me, Mwalimu, Dan, when you are doing your paper, always finish your sentence with true and fair view. I remember that was a very crucial point. There was independence. There are key terms which are needed when you're explaining some points in auditing. To tell us about the approach of the exams as we approach there, because I'm conversant with majority of the papers you are doing. We talk about the poorly managed integration, and the integration of two companies require very high level of quality management. In other words, in the words of one CEO who said, give me some people who know the drill. Integration is often poorly managed with little planning and design. As a result, implementation part of it will fail. Now, a lot of ideas are basically discussed within the organizations. For example, we normally have some policies, or we normally have some ideas which you are sharing with the management, right, within the organization, and you are giving them the ideas as per your knowledge that if they are going to be implementing them, then the business will thrive or it will do better. But sometimes they may tend to ignore. So during the implementation stage, right? You add a very good proposal, but they fail at the implementation stage. And it means that is a poorly managed integration. Yes, the merger came in, we had a very given idea which we sold to you, and we decided to do a merger. But during the implementation process, it will fail due to the different ideologies, right? Let us look at that. The other thing that we can be able to look at it here, it is paying too much. In today's merger frenzy world, it is not unusual for the acquiring company to pay a premium for the target company. Premiums are paid based on the expectations of synergies. However, if synergies are not realized, correct, then the premium paid to acquire the target is never recouped. Overly optimistic. And if the acquiring company is too much optimistic in its projections about the target company, then bad decision will be made within the mergers and acquisition process. An overly optimistic forecast or conclusion about a critical issue can lead to a failed merger. It doesn't mean this is the only point, Celestine. It means you can just be able to come up with most of the points as you go on and on. There are some of the roles of the investment bankers in mergers and acquisition, and we are saying the investment banking community is involved with mergers in a number of ways. Number one, they help arrange merger, right? The role of investment bankers. Remember, they are used, for example, to oversee the merger. There is an aspect of appointing who is going to be undertaking our merger. It is not me, because I might not be able to understand the process which is being undertaken. You cannot now you cannot jeopardize all the shareholders in terms of arranging how the merger will take place. We need to have someone who is going to be arranging for you. And we are saying the investment banking community will be able to do this through they help arrange the merger, right? They help target companies develop and implement defensive tactics. So that is why we are saying the target firms that do not want to be acquired generally enlist the help of the investment banking firm by giving them resources so that they can be able to implement their policies and ideas, along with a law firm that specializes in help to block mergers. So defensive techniques include changing changing the bylaws, right? The bylaws are the laws which are governing the institutions within, right? Zenye nyinyi mnatengeneza require special resolution to approve merger, trying to convince the target firm shareholder that the price being offered is too low, raising antitrust issues between shareholders of the two firms, then repurchasing shares in an open market in an effort to push the prices above that being offered by the potential acquirer, being acquired by a friendlier firm, correct? Taking a poison pill, among other criteria. Number three, we are talking about establishing a fair value. Investment bankers are experts that can help the firm determine a fair ratio of exit that is beneficial to both shareholders. There, for example, before that, I have thought something regarding to the investments because I normally like to focus on it, and I want you to be making the right investments. Majority of us, when we were growing up, we were being told the aspect of getting, the aspects of being successful in life, purchasing motor vehicle, building a house, right? Building a house. What else? Creating a small farm within a certain area. Buying some few pieces of land and so on. But in today's market, for example, you might be looking at um, how will your money, which you invested 4 years ago, and that is where the time value of money comes in. You invested your money, for example, 10 years ago by building up a certain bed sitters within a university, right? Now, because the technology advances every now and then, there is a specific that those bed sitters, right? Those bed sitters you are able to come up with 2010. The technology has advanced, and therefore we have different type, and people may not be interested with your bed sitters which you created under the rental aspects. Number two, if you can be able to do your analysis on the rental aspect now, you have built some rental houses. If you can do your personal research, you'll be able to realize that in every rental places, in every houses which you can see they are rentals, they are not 100% full. When you do computations, because majority of these houses are not constructed with your savings, for example, you use a loan and so on. To service this loan and be able to give you something that you can talk about the return on investment may take a very long time or periods, right? And therefore, because we cannot be able to guarantee 100%, right? For example, 80 or 60% of the occupancy, right? It is very key for you to understand that you will not be able to get the revenue as you intended through your decision that you wanted to make. That might be challenged to you. So it is very crucial for you to know that where should I be able to make my money? Where should I be putting my money and thrive in the next financial years? Now, in this case, most cases we are looking at it on the lands. That one cannot be is unbeatable, right? We talk about purchasing some lands somewhere, giving it to appreciate over the specific years, and being able to sell it at a certain profit, because we know the lands are appreciating at a very high rate and they are on high demand in Kenya. But now, due to the ile ukora imeingia pale kwa land, you might be sold a land, for example, for 2 million now today, right? Anticipating that the land will be costing or will be valued at 7 million in the 2027, right? Now, in those cases, after 2 years, now there are people who will come and say, this land doesn't belong to you. Kuondoka kwa hiyo kind of risk, people now are tended to come back now and do investments with the government. This is very crucial. We are doing now investment with the government. Now, if you are lending some money, let me talk about infrastructure bonds. You are giving it. The government is issuing infrastructure bonds for around an interest rate of 40%, for example, right? And remember now, when you are doing these investments, it is very crucial for you to look at the aspects of inflation, right? Inflation and so on. So if you want to do an investment today, I want just to advise you so that you are not going to be saying, nilikuwa na mwalimu wa financial management, but has never guided me. Now, today, if you are going to be making your financial decisions, always factor aspects of inflation, which is at 8%. So if you are at money market funds, look at the interest in which this organization is giving, right? Subtract, for example, the rate of inflation in it, because you have to be covering at, nimewapea 2 million today. Inflation keeps, there is no any aspect we can be told inflation itakuja chini, considering the kind of governments now the kinds of governments we are operating with. So it is very important for you to understand how these decisions are affecting you in the near future. So if you are putting your money in a market fund, please be categorical on inflation, the aspects of the demand and supply, the alterations of the interest rates. For example, now we can see everybody is talking about the excise duty. When it is going to be implemented, it will be affecting everyone, everyone regardless, because excise is everywhere. And I can see they are putting it through to the banks. They're increasing it. It is still in the electricity and so on and so forth. These things are supposed to be in your consideration when you are doing an investment. It doesn't mean when you started doing an investment. There is someone, there is an investor who was approached by a certain financial analyst, and they were discussing about, the guy used to have a land around Kitengela there. The land was valued around 9 million Kenya shillings, 9 million. So when you're looking at 9 million, someone may be able to see as a lot of money, right? And because, for example, we are aging, and therefore there is an aspect where we have to be looking at a specific period, how much do you require to sustain your life? There is a time, Celestine, you will not be going to work. Your children have left you. What are you going to do for yourself? And those are the decisions which you're supposed to be doing today, right? Now, let us not misappropriate what we are generating today. Regardless whether you have surplus, kama uko na surplus chukua unaweka mahali. There is a specific period when you will not be able to combine 3 to 4 jobs. Let us say the jobs will open up, but it will be so hard for you to do 1 to 3 to 4, right? We shall be having mentorship classes, by the way. So those things, when you look at it, it is very crucial for you to understand that that guy who was having a land of 9 million was approached by the financial analyst. And then there is the infrastructure bonds, which was issued by the Central Bank of Kenya. The guy decided to sell the land. The land was giving him a very good sum because it is semi-annually, not semi-annually, but it is normally broken down into months. It was in a month, it was coming to around 108,000 Kenya shillings. And he was investing on a 10-year bond. So for a person who is aging, getting 108,000, considering the inflation is continuing to increase the interest, which is going to be getting. And at the end of 10 years, you're going to be getting ile 10 million yako. Now umekula investment, umekula interest, right? By investing with the government. Both key areas are very crucial when you are doing investment. I am seeing people keeping the money in the banks now. You're keeping your money in a bank. Does the bank assist you, right? Look at the bank. Bank is taking your money, investing it on these bonds and so on. At the end of the day, when you are looking on the balances at the bank, you find that my bank still has, for example, 1 million. Sticks at 1 million. It will not be increased. They will not be able to alter by adding 1 shillings to your ledger. No, it will be remaining 1 million unless yourself you put 10,000 on top of it, and so on and so forth. So it means that the banks normally uses people money to generate their revenues, and wanajitajirisha wao wenyewe. Let us look at the SACCOs. Majority of us are telling us, let us invest with the SACCOs. But when you look on the SACCO, unless you don't require any credit, you don't require the aspects of the loans and so on, there is no any need of putting your money on the SACCOs, right? Let us now look on the money markets, we look on the bonds, we look on the aspects of buying shares among other aspects. And that is where you see the people who are making the right decisions in terms of the investments, they are doing it well in terms of covering the inflation, looking so rich, right? But it is the financial decision. Whether you're earning 20,000, whether you're earning 100,000. Mimi, I normally see it's the same. Whether you're getting 200,000 Kenya shillings, right? You might not be having more gap. It normally depends on how you plan for yourself. That is the aspects of financial management. Just wejiite kama mkutano kidogo. Now, what has remained here? It is the aspects of the computations now. And because now I want us to the computations to be done in an appropriate way. I just wanted us to repeat the video, which I will be able to share with you now. So that tomorrow when we are doing the computations, in case tunamaliza mergers and acquisition, there is no any time now utaniambia mwalimu, we have never done mergers and acquisition. Tomorrow we will be able to finish it. All right. It is very important it is very important for us to understand the concepts and make them to grasp the concepts, make use of them in solving the problems. And I would wish we continue practicing the questions. Mi nitakuonyesha swali 4-5, but the past papers ask more than 15-20 questions. So that is very crucial. Tomorrow, we shall do the computations for the mergers and acquisition, right? If we can be able to start it now to show you na kuharakisha. Nataka wewe uende kwanza usikize hiyo video. Elewa vizuri what is the mergers and acquisition. From there tomorrow, let us focus our attention on the computations. Let us meet at 8 p.m. tomorrow. Please allow me to stop at that point. Unless we have a question, please.